Good evening from Baltimore. This is Alastair Williamson. Today's the 31st of May, 2017. This is Iron Ore's Crash, and it is rusting away for 2017. Well, let's get started and talk about iron ore. We're going to go a little bit about the fundamentals here and talk about how China's massive credit expansion in the 1Q of 2016 led to a big reflation in commodities, especially iron ore. You can see that here on the top left of the screen on a monthly time frame, a 38 move here from the 38 handle all the way up to the 90 level. That advancement was nearly 139%. Massive advancement in iron ore, and more production was brought online, more stockpiling, and all kinds of great things were happening in China in 2016. Now, we get to the demand side, the demand pull side, which was the narrative Trumpflation, infrastructure, tax reform, the global economy was going to restart, everything was great. And then the bond market here in the US, especially with the yield curve, started sniffing out that maybe this was just an illusion, it was just hype, and growth was never going to come. Well, guess what? The reflation trade rolled over a month or two ago. The yield curve's been rolling over many of months here. But very interesting, what most people aren't speaking about is that the commodity market, commodities in general, have been rolling over since the early first quarter of 2016. You can take a look at the CRB index. That's the Reuters Jefferies Commodity Index. Heavily weighted in energy, heavily weighted in agricultural products, then base metals and precious metals. My point is that if we want to take a look at a commodity that is the backbone of the developed world, I'm talking about the backbone, that's iron ore and steel. We are seeing big selling that started in March. Now, the selling is in excess from the March high of about the 90 handle to the present date here of the fair market value around 55. That's a 38% downward thrust, downward liquidation. The inside market couldn't handle the high time frame selling, so a liquidity gap opens up like a black hole, and that is what we're taking a look at. So we go back to China and understand that credit impulse wave of hundreds of billions of dollars pumped in the market, reflating commodities, and that expectation of a demand coming from the West isn't here, and we're getting to a point where stockpiles are rising so quickly that the stockpiles and the production are topping demand, and that's why we're seeing that excess supply just lay into the market here, that 38% downward move. So the demand's not there, which is from the West, and the production is just being ramped up higher and higher and higher. And we're in a very, very big problem here for commodities. And the outlook does not remain positive. It's actually very negative. And if you take a look at right here, and this is when Trump got elected, iron ore was at the 63 handle. Guess where iron ore is today? Iron ore is at the 55 handle. So we're below the Trump narrative reflation price range. And what does that tell you? That tells you that iron ore is not buying this fourth estate, this mainstream media hype illusion that everything's going to get better. So I would prepare. Iron ore is telling us that there is turbulence ahead, and there is something very, very bad coming to the west and coming to the east. A very interesting quote from this Bloomberg article from iron ore stockpiles hit record in China as quality gets scrutiny, is when steel demand slows from high production volumes, then stockpiles matter, and matter fast. So that's what the market's focusing on here, is that they're taking a look at stockpiles and seeing that the massive amount of supply on the sidelines is very, very bad. So what are some of the downsides that we see in iron ore? We see in excess of 10+%. And once we get to that 10 to 11% mark, we will then reassess. But we have a downside projection in iron ore to the 48 handle. See this gap right here to the 48 handle. Take a look at the top right of the screen. Notice this teal line right here. That's the 100 SMA. Downside break. within 2 weeks or a week and a half. And one week, this week is a holiday week. So it's a week and a holiday week blasting through that 100 SMA. I mean, that's incredible. I mean, look at all the other moving averages from the 200 weekly to the 10, 20, 50. It's just slicing through any support. Any support. It's very bad stuff that's happening in iron ore. Let's take a look at iron ore versus the S&P 500. And iron ore is in blue. Very interesting to note from the 2015 time frame to the 1Q of 2016 time frame, it's been known, and into the early part of 1Q of 17, it's been known as a forward-looking indicator for the U.S. stock market. And as we can see, not all of the times, but a majority of the times when iron ore would go up or down or advance or decline, we would see some type of move in the U.S. equities shortly after. Notice this massive move here in the mid-summer of 2015 timeframe, and then we saw an equity downside move in the latter parts of 4Q of 2015 timeframe into 1Q, and then we saw that reversal where the central banks came in, suppressed the dollar, reflate commodities. China has that massive credit impulse, and then we see a massive upward move in iron ore, taking the U.S. equity markets with it. Now this is the interesting part. The interesting part was, and it just seems like it was set up, but the Trumpflation narrative, reflation narrative, it was a great narrative. And what it did was it provided that key to the puzzle. All right, guys, well, we produced all this supply, we stockpiled here. Where does it go next? Quote unquote, it was supposed to go to the reflation trade, the infrastructure building, all this great stuff that's been promised. And that's why iron ore had a massive upward move. Well, guess what happened? The demand pool isn't there. The political equity of Trump has deteriorated so quickly that iron ore doesn't think that this hype in the future of all this great stuff coming to the U.S. and all this demand for iron ore doesn't think that's going to happen. And what's happening now is the market is focusing on stockpiles and stockpiles only. And what that basically means, it's coming to the realization that the narrative is broke. U.S. is broke, and focus on reality. And you can see from an illusion to reality, it's a big liquidity gap. It's a scary, scary gap. So once again, what is iron ore telling us? It's telling us that the demand pool, the market, does not think this Trumpflation, all this great stuff is coming forth in the time period that was stated or projected, and that iron ore has to come back to reality and take a look at its stockpiles in China. And you can see reality. It's harsh. It's very harsh.